Hello and welcome to another update video about SUI. A lot of people asked me for an update. I explained to you in the last updates that it's difficult to produce a reliable Elliott wave count for SUI. Nothing broke, support levels didn't break, but I have still adjusted the wave count based on the latest movements. It just, with the latest extension to the upside, just didn't have the right look anymore. The last update in which we talked, I can't remember actually what the count was. I'm looking at so many charts, but I updated it today. It now looks a little bit better, but still it's not a reliable count because in contrast to, for example, SEI, the SUI chart here doesn't move in an impulsive fashion. You might say, oh, but it's going up. Yeah, of course, it doesn't mean it's bearish, but it means it's just not an impulse that's developing here. So that makes it extremely difficult. Also considering, unreliable. Also considering the short chart history, limited. I mean, you could say, okay, it started in May, but you can forget about all of this. For an Elliott wave scenario and Elliott wave pattern, we need an uptrend, okay? We need an uptrend. Yeah, we have one, but we haven't got a complete 5-wave move. It's all corrective. Even here, in the yellow count, I'm tracking a diagonal pattern. These diagonals tend to change their structures. And it's not really helpful in terms of predictive quality. So I've got here an ABC structure in wave 1. So therefore, we have to favor the idea of a diagonal pattern. But again, also the A wave, could just simply, this wave 1 could just simply be the A wave of white wave A. So again, it's all just moving in corrective patterns. Then here also, this was also an ABC. I'm not labeling them all, in wave 3. And yeah, we could be now in wave 5, obviously. So if this is the case, then what would be an ideal target for wave 5? Well, we take the length of waves 1 to 3. Then we go to the low of the wave 4. That was extremely shallow, that wave 4. Again, not really reliable. Yeah? And in this scenario, we're dealing with next resistance at, oh yeah, it already crossed that. So probably this one, the 61.8 extension level. Let me delete the ones. Yeah, okay. 61.8 extension level. That's at $2.35. Again, it's not a prediction that we get there. Because of the chart history, we don't have that larger trend that's supporting the move, okay? However, it is a level to watch if we get there. And above that level, we're dealing with, I would add that to the chart as well, the 78.6 extension. To be honest, all we can use at the moment are Fibonacci levels because there isn't anything structurally left. Yeah, and the Elliott wave count that we have is extremely questionable. Okay, limited. But yeah, so it's basically the area between 235 and 296 that we could be watching. And if we see a break above that, then it would make the yellow, it would make the yellow scenario less likely. And we're rather dealing with the larger ABC pattern, which would be in the short term more bullish, but also far less certain. I wanted to increase the wave degree a bit further. Also far less certain because an ABC structure. What happens after an ABC? We don't know. It could form a larger ABC. It could turn into a triangle. New bear market lows could be coming. Very, very difficult. So what I would prefer from a bullish point of view is actually if we see a 5-wave pattern develop and then a decent 3-wave pullback. But as you can see, it's just a choppy mess here. Not very clear. Best you can do, I think, is just to use the trend line here. Be aware this looks a little bit like an ascending wedge that's happening here. It's just something to watch. These tend to break to the downside. That would work well here with the idea that this is actually a diagonal. And the wave 5 could also be, an ABC structure, obviously, in wave 5. And then once that breaks, I think we might see a test of the $1 mark. Now, it doesn't have to break. It's just something to watch. If we see a breakout of the trend line to the upside, then this area will come into focus. Looking at the indicators, and the daily is probably most reliable here, we start to see bearish divergences on the SUI chart. You see it here. I try to zoom in a bit. On the RSI, okay? Bearish divergences, they are not They are not super reliable yet because we haven't got a top in place here on the RSI, but they start to appear. It's a bit too early to call it really a bearish divergence. I mean, while the price is making higher highs, yes, we've seen lower highs, but the latest one here is pushing through again. So that bearish divergence broke and we haven't seen a new top. Okay, so if it turns around, then we have a bearish divergence on the RSI. At the moment, it could still extend above the previous high. But what you often see is in the third wave, which is also why I labeled it like that, the third wave is often giving us the highest reading on the RSI. So I'm obviously using indicators in the background. What I know is that in a third wave, especially a third of a third wave, which we don't have here because we have a diagonal, the RSI typically has the highest reading. And then the fifth wave is where you start to see those bearish divergences. Also, if we're dealing with an ABC structure, the A wave typically shows the strongest reading. All of that currently present here. Yeah, but there isn't much more to add. I think I gave you key support level, which is the $1 level. There isn't really much else you can use. At the moment, we have next upside levels to watch, a trend line, an ascending wedge pattern. Yeah, not much more because we are in uncharted territory on this chart. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.